Good day everyone, welcome back to the channel. In today's video we are going to talk about inverse fair value gap. So what is an inverse fair value gap? An inverse fair value gap is a type of price imbalance seen on a chart that is consequentially similar to a traditional fair value gap, but it appears on the opposite side of the move, often during a reversal scenario. So you'll see in these pictures, we have our price action, and then the price action need to take liquidity for me to enter and then push down. So normally what we will see a fair value gap on the right hand side on the impulse move down. But for the inverse fair value gap, we are looking for a fair value gap that took out the liquidity that's on the left hand side. Price broke through that fair value gap. It didn't respect the fair value gap. And then we wait for price to retrace into that fair value gap and then come down and we target our targets. So the steps we follow for this is going to be, we need to identify the higher time frame point of interest. When price enter your higher time frame point of interest, you are going to wait for the setup. Wait for liquidity to be taken on the lower time frame. Wait for the market structure shift to happen on the lower time frame, and also identify the inverse value gap and place your trade with stop loss below your most recent high or most recent low. So as you can see, here's another example. Liquidity has been taken. We had a market structure shift here. So now we are waiting for this inverse fair value gap to form. We had it there. Price retraced and then price went down. Okay, so if you want our free course on Forex and synthetic trading, you can go to this website, tradersreview.co.za. The first thing you're going to do, you're going to go to Academy. When you are inside of the Academy, you're going to go to video courses. As of this video, we have a Trade 245 giveaway as well. Click to read more, to learn more, to win either a 2,000 Rand or a 5,000 Rand funded account with Trade 245. And then if you want our free course, you just click on read more. When you are inside of our free course, you'll see everything that you will learn. We have our Forex course and we have our synthetic course, all for free. All you need to do as soon as you are on our website and you click on Academy, there's going to be a pop-up that you need to fill in your email address and your name, and then you are going to get access to our free course, all for free. So as you can see that we are on NASDAQ, the 1 hour. There was a nice big point of interest there with that order block resting there at the highs. So we drew out this order block. As you can see, price came in, price tapped in our order block. So as soon as price taps into your order block, we go to the lower time frame. This is the 1 minute. So you can start from the 15 minute, 5 minutes, 1 minute, whichever lower time frame setup you see and where that fair value gap is formed, you can stay on there. For the sake of the video, I went to the lower time frame. So as you can see, this is the lower time frame. Price came in and then we had this move down. So here's a nice example. It's the same as this one, just with the annotations on it. So price came up, tapped us in. We took out this liquidity. So now we are waiting for this low to be taken out. Why this low? As you can see, this is a fractal low. Candle on the left is higher, candle on the right is higher. As you can see here, that is not happening there. So this is my most recent fractal low. Price came in, came down, tapped the order block again. Also, internal liquidity has been created. Price came down. Now we broke the market structure shift. So let's have a look. After the second tap, price made this inverse fair value gap here. As you can see, it broke this liquidity, went up, we had the market structure shift, and now we are going to wait for price to retrace and come back to our inverse fair value gap area. And then what you do, you place your entry. You can put your stops if you want to be conservative above this high here. Enter the trade 1 till 2 or 1 till 5, and then you can see price reacted immediately from the inverse fair value gap. Let's go to the next example. Here's another one. We are on the British pound USD dollar. We had a nice big point of interest, a nice order block here. This will be a 4-hour order block. So price came, tapped in our order block. So what we do, if price enters our higher time frame POI, we go to the lower time frame. As you can see here, we are on the 1 minute. Price tapped in. This is how it looks on the lower time frame. So let's add the annotations. As you can see, we had our liquidity that was resting here. Price pushed down with a big impulse move to tap our higher time frame order block. This is our market structure shift. Why this one? That this is my most recent fractal high on the 1 minute. Candle on the left is lower, candle on the right is lower. So we draw that out. Here we have that inverse fair value gap. Price pushed up, did not enter yet. You can, if you are a little bit more aggressive, you could have entered here already, but I'm going to wait for the confirmation. Price broke through, and now we're waiting for the retracement, and price entered here for the first time, went up, came back to our entry, and then price went up. So here you can see price broke this market structure shift, placed my entry right over there, let price roll out, and there we have our 1 till 2 risk reward trade. Let's go to the next example. Alright, so if you are someone that does not follow like ICT, this is a simple support and resistance one as well, not necessarily smart money concept. We are here on the 4-hour on US 30. As you can see, I marked out a nice support and resistance level. There's a lot of touches there, broke through. There's a lot of respect on this level. So now when price broke through here, I'm going to wait to look for an entry as a break and a retest on this support and resistance level. So here you can see we're on the 5 minute. So as you can see, price came in. We didn't get our entry on the lower time frame. Price broke through. This is this wick that you're seeing there. That little wick there on the 4-hour is this little push up on the 5 minute. So this is how it looks on the 5 minute. Let's see how it looks with annotations. So as you can see what I did here, price created this liquidity, big impulse move up. Here is my last fractal low. As you can see here, candle on the left is higher, candle on the right is higher. We created a fair value gap. Price didn't respect this fair value gap. It broke through. We had a market structure shift, and this fair value gap became an inverse fair value gap. You can enter your trade right over there, and then you can target a 1 till 5, 1 till 2 risk reward trade. As you can see, we got tapped in, and immediately we have our take profits on the inverse fair value gap examples. So yes, this is an easy way on how you can just find some extra confirmation. It's a nice model to trade. Go back test it. Let me know in the comments what you think. And then yes, we will see you in the next video.